Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. Let's get started. We are almost 2 hours into trading. It is Friday, March 19th. Hello, traders. Let's take a look at yesterday's pick. Then let's take a look at the market. Then let's find a new pick for today. Going to go in and take a look at VUZI. That was the trade that I highlighted yesterday. I had suggested selling an out of the money bullish put spread, keying off of that $20 price level, selling the $20 put, buying the $18 put, doing that for a 50-cent credit using the April 16th expiration. That trade is in really nice shape. Even though it's a tech stock, you can see how yesterday it made a new closing high, and there it goes today, even with the market down. That is relative strength. That is the edge that we trade. The video came out somewhere around in this area right here, about 2 hours after the open. You can see how the stock is higher than where the video came out, but here's the true test. I'm going to overlay the S&P 500, and you can see that this stock has really had to weather a storm. So there would have been our entry point somewhere around here. There's what the market did. This gray line is the S&P 500. Look at how well the stock held its bid. That is a true sign that buyers are lined up. How do I know that? Because if I look at the daily chart and you look at the gains that the stock has had so far, boom, 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 boom. If this were all fluff, at the first sign of trouble, this stock would have sold off, and it would have sold off hard because there would have been profit takers. Even with the market going down, even with the temptation to take profits, everyone who was selling was immediately met with a bid, a buyer. And that's why the stock is not going down, it's going up. That is relative strength, and that is our edge. And we also use my 10P indicator to help us improve our odds of success and to help us time our entry and exit. So let's take a look at what the market's doing. We've had a lot of volatility recently. You can see yesterday when I did the recording, I said, I don't know what's going to happen. It is quadruple witching. We've got quite a few buyers here. If we test that low later in the day, it's probably going to fail because sell stops will be triggered, and that's exactly what happened. The other thing I had mentioned to you yesterday is that a lot of institutions have to roll their positions from March to June. As the market has momentum in one direction or the other, those programs feed on themselves, and it makes it easier for them to roll those positions. And so when you get a drop like this, it feeds on itself. Today you can see that the market is down. So we are testing support again. I'm not overly encouraged by what I see so far today. Here's what I would have liked to have seen from a bullish standpoint. Long red candles closing on their low. Would not really want to see four of them, but maybe two nice ones. And then an instant long green candle right into the gap and close that gap very quickly. That would have told me that this selling pressure was just program related and there really wasn't any substance to it. But you can see we haven't had that kind of price action. It's all been mixed green and red candles. We've got a similar situation setting up right here as we did yesterday. So you've got buyers buying the low of the day. Buy, 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 buy. Where are their stops? Right below that. So that makes it an easy target. If the sell programs get going today and we take out this low of the day, you're going to see another big crackdown. Just like that. Buy, 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 buy. Uh-oh. Hit that long red candle through that support. Sell stops are triggered, whoosh. Now what happens after sell stops have been triggered determines whether or not you're going to recover or whether you're going to go lower. We only had one long green candle, a one-off as I call it, and then the selling starts to resume. This is a bearish flag formation. You take out that upward sloping trend line here and goodbye. So we don't want to see a similar pattern today. Now, if this were just shopping and trying to trigger sell stops, here's what you would see. Long green candle like this, followed by maybe a doji, and then another long green candle right above the prior day's low. Then you know that that was just programs trying to trigger those sell stops. Today, I think there might be a little bit more substance to it. It is quadruple witching. I'm not reading too much into the market drop that we've had the last 2 days. The Fed came out and said that they are going to keep rates unchanged until 2020, the end of 2023. So no rate hikes through 2023. It's what the market wanted to hear. They got that news, but global interest rates are rising, and that's putting upward pressure on our yields here. So let's take a look at what the TLT is doing because it's critical. But watch the market here. This is what I would call a bearish divergence with my 10P indicator, and we've got a bearish cross right here. This is one I probably would be trading. You can see with that type of rally off of its low, off of this deep trough, you would expect boom, 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 boom. Market really popping and jumping higher. We didn't get that at all. In fact, the market was lucky to just hang on to its little bounce. Now that we get the bearish cross, I think we could see some selling pressure. So I'm a little bit bearish today, but let's take a look at TLT and see what it's doing so far today. You can see this gigantic drop in TLT until we get a hard floor in TLT where we have 3-4 days where we have green candles consecutively and nice long green candles. I am not going to consider this a low. We've got to start marching higher, and we've got to start breaking above this steep downward sloping trend line. Let's draw one right now, give you an idea where it comes into play, and that is the sloping downward trend line that we need to get above. Once we do that, you're going to see a very strong bid in tech stocks resume. When we did bounce a little bit this morning on the TLT, we got a nice little bounce instantly in tech stocks. And there's the TLT so far today, really doing a whole lot of nothing. Well, there is one other point to be made with TLT, the US 10-year treasuries, and that is that when the market is selling off, sometimes you'll see a rally in TLT because it is a flight to safety. So we need to make sure that the rally in TLT is not simply a rotation into a safer asset, risk off to be specific. And so you can see here how late in the day yesterday when the market was selling off, TLT was moving higher. I'll do that overlay one more time for you so you can see it. S&P down, 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 down hard. I suspect that this rally might have been a flight to safety. So as the market comes down, don't look at TLT and go, oh, look, TLT is rallying. That means the market's going to rally. No, what we want to see is we want to see the market rallying and we want to see TLT rallying. So we want to see TLT marching higher and we want to see the market marching higher. That would tell me that as the market marches higher, we're not seeing a sell-off in bonds and an exit from that trade, meaning we don't want to have bonds sell off because then that would have been a flight to safety. I hope this is making sense for you. So we want to see TLT moving higher. We want to see the market moving higher. That's really what you have to watch for. And we want to see nice consecutive green candles on TLT. Then I think the market will have a chance to move higher. So let's take a look at the daily chart on the market. Yes, we've had some selling yesterday and today, but realize even at the high yesterday, we were right there at the all-time high. In fact, Wednesday after the FOMC meeting, we made a new all-time high just briefly. So we're not that far off of the high yet. We don't want to see a string of long red candles in here. I don't think we're going to get it. I believe that with earnings season approaching, we're going to see a series of higher lows. So we can expect these red candles, but I believe that we're going to continue to trend higher. Still a lot of uncertainty. That makes it good for selling out of the money bullish put spreads. That is the best strategy because we're able to distance ourselves from the action. We're able to keep our distance during extreme market volatility like this, and we're able to take advantage of accelerated time premium decay. So let's take a look, see what we've got, put the 5-minute chart back up so we can follow it, and we're going to take a look at some stocks in one of my searches. I keep telling you, Pop Bull is the best search for swing trading. So I clicked on Pop Bull this morning. The market's down. Not a lot of candidates to look at. Facebook looks fantastic. You've got this downward sloping trend line right here, breached to the upside. You have the stock above major moving averages. There's the 100-day, the 50-day, the 200-day. It is a tech stock, and it has been strong relative to its sector. At a time when tech is getting beaten up, let's do an overlay. Facebook, QQQ. Not only does Facebook have strength relative to the S&P 500, Facebook also has strength relative to the QQQ. And you can see how it's been marching higher when tech stocks have been selling off. Very, very good sign. So let's take the overlay off so that we don't obscure the chart. And let's take a look at a spread that we'd be able to do. Again, this came right off of the Pop Bull search. Need to check the earnings release date, May 5th. Okay, so we need to sell a bullish put spread inside of that date. And right here, I've gone in and I've taken a look at where that support level would be. I'd like to sell a bullish put spread below the 100-day moving average. That will give me additional support to lean on. So I've actually got 3 lines of support. One would be the downward sloping trend line, was resistance, now support. That comes at around 280. Secondly, we've got this upward sloping trend line that also would lend support around that 280 level. Then we also have the 100-day moving average. We've got heavy volume. We've got relative strength, on and on and on. Okay, so let's increase our odds and go out of the money and sell a bullish put spread below that 100-day moving average. So I clicked on the 270 puts. I clicked on the 265 puts. We have $5 between the strike prices. That means that I'd like to receive a $1 credit. You can see that that spread is 85 cents bid, offered at $1. I had mentioned to you that the S&P 500 looks a little soft to me right here. I'm expecting it to come in a little bit. I think that $1 on that spread is going to be attainable. If I bring in $1 for this bullish put spread, I have to put up $4 in margin. $1 divided by $4 equals a 25% return. So the trade would be in the next month, by April 16th, I'm expecting this 100-day moving average to be preserved. If Facebook stays above it, I will be able to make a 25% return on that trade, and time premium decay will be working in my favor every single day. I'm not just expecting the stock to sit here, though. If the market finds support and it starts to run higher, I'm expecting this stock to march higher. As it does so, we will have even greater cushion on this trade. The other thing to consider is that we are 2 standard deviations out of the money. The red dotted line here is 1 standard deviation. The blue dotted line is 2 standard deviations. So this is a very high probability trade. Let's take a look at a couple of other charts. I'm going to go into heavy buying, see what we've got popping there. FDX, very nice after earnings, good breakout, 100-day moving average, sell below that 100-day. Yes, that trade certainly could make sense. They had very, very good revenue growth, lots of shipping, a 21.3% increase in revenues in the last quarter. Those are super, super strong numbers. So I think that it's going to continue to climb higher, but why take the risk in a choppy market? Make sure that you sell an out of the money bullish put spread. So let's take a look at other stocks that are popping up. A lot of these are ETFs, so we're not going to go there. Let's take a look at relative strength 30. Right now, we've had the market pulling back for about the last 30 minutes right here, you can see. So let's go back and take a look at stocks that have actually been strong relative to the market on a 5-minute basis. AI, nice little bounce here. DKNG, really nice. Look at that strength. This stock is continuing to power higher. I think it might be fueled in part because of the NCAA tournament, But in any event, that stock looks really, really good. So this is the type of stock that we would be buying right now with the market starting to find a little bit of support here. If we are wrong and the stock continues to tread water like it is right now and the market sells off, we'll be able to exit with little or no loss. But in a case like this, the stock may even move higher. If we're wrong on the market, we can still make money on the stock. That's the edge that we like to work all day. I did have another stock that I really liked, and it was WSM. And that is a stock that I highlighted early this morning in the chat room. And I'll try and find that post very early in the day. Let's take a look at the stock, WSM. Had a lot of members that did very well on this stock this morning. And there you can see how the stock has continued to move higher even though the market has been down. I believe that this stock is going to continue to rally. And I'm going to go through my chat room here and take a look. And let's see if we can find that post, find the time for it. And I put exclamation points on this one because I really like WSM. And then you'll be able to see CLVS is another stock that members were on early this morning. And DG has been excellent. And there you go. And this is at 9:12, so about 40 minutes after the open. You can also see DG about 40 minutes after the open. So let's take a look at DG and WSM. WSM. You've already seen. Look at that rally. This is where I called it out. That's what the stock did. DG. This is where I called it out. That's what the stock did. That's how we do it, folks. I don't want to come across like a genius. We've got the searches. We have the methodology. We have the trading system and the approach so that when we get these market conditions, we know exactly what we should be doing. We focus on heavy volume and relative strength. We have other technical patterns that we watch as well. And then we use our searches just like that. You've seen how easy it is to find these stocks. CRM, let's take a quick look. Haven't seen that one yet today. Look at that. That's a nice little move. Take a look at the daily chart. Stock is compressing. It could be ready to release here with a move like that today, but nothing on the daily chart that impresses me. But the 5-minute chart looks pretty good. There might be a day trade in there. You can see the stock is above the prior day's high. You can see how the stock held up well during this recent little market drop. Yeah, it'd probably be worthy of a day trade to the upside. That's all I've got for you today. Look for me Monday morning. I might do a video Sunday night as well. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.